Hello, everyone. Welcome to this exciting edition of the Exponential Blueprint. Today, we are going to talk about a major opportunity for many small, medium, and large companies around the world. As we previously mentioned in our edition of the Exponential Blueprint, M&A is a 3.5 trillion opportunity. This is according to 2024 figures. And it's my pleasure today to have Marguerite Bowles, who is an M&A expert who's currently based in Asia. Uh, how are you today, Marguerite?
Hi, Matteo. Lovely to be here. I'm good. How are you?
Not too bad. Thank you. Thank you, Margaret. It's such a pleasure because we recently started to work together with an M&A boutique called DD Consulting, which has 22 years experience in M&A. And I just leave the floor to you, Margaret. Just tell us about you as an expert, as an M&A, as currently based in Asia.
So I've been working for 11 years in the pest control market. I lived for 7 years in Singapore while growing up in Mexico and studied in Italy, India, and the UK. Over the past 3 years, we've done 14 acquisitions within the Asia region, which included countries as India, Pakistan, Malaysia, Singapore, Indonesia, Vietnam. So very interesting space, which is changing a lot in the latest years. Very
Thank you very
promising.
much, Margaret. As we know, Asia is a major market expanding. And according to Goldman Sachs projection, actually, we have a major transformation going on with such economies as Indonesia, India in particular. Actually, Goldman Sachs has projected that there will be an increase in GDP, which is going to be very substantial in those countries. Apparently, Indonesia is bound to be the economy number four in the world already in 2050. And India is bound to become economy number two in the world in 2075. So those are really interesting time to be based in Asia. As we previously said, you're very welcome to join our free newsletter called the Exponential Blueprint, which has already been joined by 20,000 ambitious founders. And I wanted to stress on this. We have welcome founders who are looking for transformation, not information, because information you can find it anywhere nowadays. You can go to the internet, you can go to YouTube, you can use an AI tool. That's not what we're looking for. We're looking to give you transformation. So we are actually ranking top 5% finance newsletter in the UK, and it'd be a pleasure to have you in our newsletter. Now, let me come now to the to the discussion about M&A with Margaret as an expert. We're gonna have effectively full section. We're gonna start with strategy and planning, because as you know, nothing really get executed properly if on the outset you do not plan properly. The second thing, however, the second group of discussion will be about cultural dynamics. And that's because most of the time we find the failures in integration, they are due to cultural dynamics. Now, with Asia in particular, thanks to the experience that Marguerite will convey to us, this is so much more urgent to understand, you know. So Margaret will give us some insight into that. Then we're going to look into financial consideration because it's always about really improving your business, about really doing M&A so that we can transform our business in that respect. Looking at how big businesses become bigger effectively. Margaret is obviously as direct experience of that. And then we're going to look into operational integration. Okay, let's start now with strategy and planning. I'm going to start with this question with Marguerite. Now, the question is, in your view, in your experience, what makes mergers and acquisition in Asia different compared to the West?
I mean, we could start looking at the main KPIs, right? So volume, obviously the volume tends to be lower, although in the recent years it has become more and more. We could look at aggregate value, then because of the foreign exchange rate in Asia, It's still lower than Europe, but this is about to change, I believe so. And we could look at the nature of the transactions. But I think these are all consequences of an underlying difference, which is basically their regulatory frameworks, which includes the taxation system, but also the cultural elements that derive into business. So business etiquette and really understanding what goes beyond just numbers. So I think those are the key differences.
Okay, when you've been through these deals, what do you think was the main reason for not doing it properly in terms of overlooking some element in planning? What is the pitfall that you normally see when an M&A activity is started effectively?
I think the main element that is sometimes disregarded is how important culture is and its implications in every single step of the acquisition. When it comes to transparency of data, due diligence, and then has its implications on the timeline, negotiations, religious implications. I've had deals that got delayed for months because there were issues around the acceptance of basically the religious system. It was considered unlucky to sign a deal within that month. And so,
Okay.
well,
You
there's
have to know
nothing
the
that can be
calendar
done.
well, yeah.
Yes, exactly.
You have to study the calendar, the religious calendar. It's very interesting. Thank you so much. This is so insightful, yeah.
Yeah.
Yeah. So no, yeah, you were mentioning about the religious calendar, but that's something that we normally don't see in the West, of course, you know. And in terms of timeline, you know, from the moment you start, you identify a target to post deal integration. Tell us the journey, because many think that this is such a mystery, and instead, you know, obviously you can demystify with your experience, of course, yeah.
Absolutely. I would say that timelines are typically a bit longer in Asia because it takes time to build a relationship. So it's easier when a relationship's already built. People don't just go straight into business. The other thing is there are a few challenges around data. So initially, there is basically the sourcing of the deal. So that depends whether the target is known or not known. So if you need to source target, you need to allow a few months. And then there will be basically an initial approach where you try to understand whether your target is actually open to be acquired. Once you do that and you agree on that part, then you would need to sign an NDA. That NDA can do back and forwards depending on which law applies. So it's finding an agreement. Sometimes there's also a power struggle there, but once the NDA is signed, then we start asking the target for information. This is to build the pre-offer notification. And on occasion, targets struggle to provide that information or don't feel comfortable sharing that information despite having signed an NDA. That can take a month and a half, two. Once that is received, then we build basically an initial model, which is then used to build a business case and get initial approval. Once that occurs, there is the agreement or the authorization to go through due diligence is obtained. And then that could take a few months when we get into due diligence, depending on how easy it is to gather data. In
Mhm.
Asia, it could be that some targets still rely on systems which do not allow them to gather data that easily, or a lot is paper based, or they're just not confident about sharing that information yet. So there's a bit of trust, a bit of openness on them sharing the information that allows you to build a secondary model, which is basically the final business case. Once that is obtained, you get again to authorizations, approvals, and then you start finally the whole SPA APA negotiation. So you need to build a draft, and then again that could take months depending on whether it's easy or not to agree on a document that the warranties Once that is agreed upon, we get to signing. Then we got a few clauses called the completion precedents, and then we get to closing, which is basically when the target is actually acquired.
And then we
So that
start
could take,
obviously with the post integration, yeah.
yeah, and then we get to the post integration. Interestingly enough, the target that I've seen took the longest. One target took almost 8 years to get acquired.
Yeah, as well. But we need to encourage the listener here to say it's not always like that, you know.
Usually it's not like that. But on occasion, yeah, it is. It takes some time to build a relationship. Yeah.
Okay, so that's why it's important to have the presence that you obviously have, and you've had for so many years in Asia. Just, obviously, from the educational side, yeah, we would like to tell the audience about the difference between bolt-on acquisitions and strategic ones in Asia. Tell us about what you know, what you can tell us about your experience as well. Yeah.
I mean, they both occur within the Asia region. However, bolt-ons tend to be more frequent for several reasons. They're usually smaller uh, and considered less risky. The reasons behind doing a bolt-on is usually either to get market segment, or they want to acquire a new technology, they want to have reach or density. So the objectives and the risk is a lot lower. So bolt-ons do occur, I would say, a lot more. Strategic acquisitions will tendentially take longer
Mhm.
because there's a lot more risk. The financial considerations are a lot bigger. So the process or the thought through process is longer, I would say.
Okay, no, thank you for telling us that. And obviously, yeah, long discussion to be had about strategic ones because they are the ones who are change are very transformational.
Correct.
But yeah, as you said, bolt-on acquisition may be faster for obvious reason because obviously it's more of a decision that is made and then it's executed more quickly. Um, Valuation. Now we know that the exponential blueprint is a lot about leveling up entrepreneurs with investors, yeah, because the knowledge about, or we say the education about valuation is what we would like to tell more people about. In terms of the valuation expectation, I wanted to ask you this question. Have you noticed that those vary significantly by country in Asia? Tell us a bit more about the valuation, what people think, what people act on valuation in general in Asia.
So yes, absolutely. There's a lot of differences within the Asia region, and it impacts a lot more than everything. But valuation is also impacted. Bear in mind that valuation is very linked to stability of the country. So since different countries are stable, more stable, they have a more stable currency. Those all impact the valuation. Um, Countries, however, are not the only factor determining the valuation. It impacts the industry. It impacts the market segment, the seller that you have in front, your growth perspectives. So there's a lot in play that comes into valuation. What I can say, though, is that the Asian Valuers Association would love to get to a system that is more harmonized across the region, but unfortunately, it's not yet at an implementation stage.
I suppose this is part of the fast growth that is experienced in these economies where there's still a lot to learn about how the West uh, does valuation effectively. When you got fast-growing economies, you tend to have this type of gap in sort of in education, I would say, but yeah, not a widespread knowledge about these deals, I would imagine. Is that correct? Yeah.
Yes, that's absolutely correct. The regulatory frameworks are changing. There's a lot of appetite for M&I, but sometimes it takes a little bit of time for them to adapt. And so it's a little bit of patience, but there is a lot of appetite.
Okay. Now, thank you for this. This is so insightful. And as we have been able to see with strategy and planning, is so crucial to count on the right experience when it comes to M&A deal in Asia. Now, from one end, we have an opportunity, which is the opportunity of a generation, because the Asian economy are really growing that fast. We know about that. Really, with China, obviously, has been the main country that has been so growing. But now we got Southeast Asia really coming up really, really fast. From one end, we got the opportunities. From the other end, the recommendation is really to act with as much education, knowledge, and experience as possible. And this is what we are so lucky to have with Marguerite today. So thank you so much for covering this first phase, Margaret. What I wanted to cover with you now is about cultural dynamics. Now, cultural dynamics are where we normally see, regardless of geography, where we normally see the most negative surprise when it comes to failure in mergers and acquisition. And I'm sure Marguerite has already given us so many ideas about we should be prepared, So about this, but obviously, yeah, avoiding surprises is as important as I mean the final result. Uh, so I wanted to start with this question for you, Margaret. What are the cultural, uh, lack of understanding that we see that, the misunderstanding, should we call it, you witness during M&A negotiations in your career so far?
Oh my God, there's been so many. Sometimes it comes to who the decision maker is, understanding the motivations and fears for the seller. It comes into not losing face. So this is crucial when it comes to communication with the seller to create collaboration. So very certain cultural factors could create fear in them and make them step back, especially when you're dealing with bolt-ons. And on occasion, it could also create very big delays. I mentioned the religious event before, but those are just some of the examples that we experience. And some of the blockages that we've had were because of misunderstandings, where we need to step back, sit around a table, and explain things back so that we could find an agreement and common ground. And so this is crucial in Asia where it's a negotiation game. You give, I give. And if you're not able to understand those rules and read the room, you might end up not being able to close a deal. And I've seen it happen. We had deals that we had done all the work and it came to signature and the seller left the room
Okay, very interesting.
because we were not able to reach an agreement on one clause.
Okay, that's quite enlightening. That's quite enlightening. No, it's great to yeah to learn about this. I think the reader will be the listener will be very interested in finding out about this further. No, thank you. This is you could say that this is so much more frequent in terms of cultural misunderstanding in uh, in Asia, or is it because the lack of knowledge of the culture maybe? What do you think is the way to avoid this?
I think it's just ingrained. Sometimes it's not that they really uh, think about I'm doing this because of culture or this is a misunderstanding. Sometimes people just don't understand each other. So how to prevent this would be to get the right advice.
Okay, no, no, thank you for that. And management styles, tell us about management styles across Asia, um, about management styles and how they have an impact really on the post-integration phase?
So I would say one very important thing around Asia, and I really like that. Sometimes they tend to find creative solutions. So it is important to take a step back and understand where they come from. Creating that space of trust. So I think this is essential, having the right communication. On occasion, there's also a matter of education. One of the challenges I experienced is in one of the acquisitions, the employees that were acquired did not have bank accounts.
Mhm.
So we had to take a step back and take them through the whole process. So I think the importance in managing a successful post-acquisition integration is really being adaptable and being open to things being done differently and finding solutions together with the teams. So an integration is a collaborative exercise, and it cannot be done by one man. It needs to be done by a team.
It's so interesting to see about this very unusual situation. You have to be really prepared for pretty much everything, I would imagine, in that respect. But that's what happens with many post-acquisition situation. We tend to underestimate, regardless of culture. Obviously, culture is an additional variable that many really need to take into consideration. And next question was going to be, because you've been actually you worked in the past, sorry, for a Western company, UK-based company, Rent-to-Kill, a big multi-billion company, and you were successful in this, obviously. But the question is, given your history, given your background of being successful in Asia with a Western company, yeah, the question is, how can a Western company succeed without adapting to local business etiquette? That's obviously the part of the sort of the question that I'm asking, because then the other variable would be well, adapting is a bit not adapting is a bit difficult. What is the way to be successful in any case? So this is obviously the question related to your experience. Yeah.
So for me, can a Western company succeed in Asia without adapting? Probably not. The reason is that M&A is just way beyond just closing the deal. You might be able to close the deal without adapting, and even they're doubtful. But what is really important and the benefits of the acquisition come after that, right? So they come during the PMI where you measure performance against business case. And if you're not able to adapt and you're not able to bring people on board, not only employees, but customers, your acquisition will not be successful.
Mhm. So
So
it's a must really to adapt, really. You have to obviously, but that's what big businesses do to become bigger. Uh, yeah, we got so many examples. We got the biggest companies in the world, like Disney, like Gillette, like McDonald's. They don't just go into another country and they just impose their own etiquette, the way they used to do business in their own country. They need to adapt to the culture in order to be successful. You can't have the same menu of a restaurant in USA and in India. Obviously, it's quite different, you know. So, you want to be successful, you have to really adapt to the culture. Yeah. So, thank you for telling us this. So, it's really important. So, the advice for all of you, really ensuring that you treat culture as a major item to be executed in terms of cultural dynamics when you go and acquire a business in Asia. And if you were to give some advice to founders or any entrepreneurs, anyone who's considering cross-border expansion through mergers and acquisition in the region, given the opportunity, because it's such a large opportunity, what is your advice, Margarita?
I mean, I would say M&A is an amazing opportunity that can really help your business grow, but it needs to be done right. And by right, I mean having a clear strategy, really understanding why is this target interesting to you and what it will bring to your business. Um, Getting the right counsel, and more importantly, trying to really understand how that business has operated successfully so that you can get the benefits not only from synergies, but also from good practices that you can use to even improve more your own business.
So effectively studying also the history of the business, the way it has operated in the past before making an acquisition. Is that correct?
Yes, absolutely.
Okay. Now, thank you so much. There's so much that we learned through this phase, effectively, cultural dynamics. We understood really, thanks to the very vast experience that Margaret has, obviously, that it's so essential to use cultural dynamics as a major items that require success, really. So we have to be successful merging with the culture, with the local culture, if we want to succeed. However, the opportunity is so large, the opportunity is so huge for the transformation of your business that it really is worth really spending more time into this. Yeah. Let me now come to the next phase, which I wanted to discuss. It's about financial considerations. Now, financial consideration, we've been speaking in the past in the newsletter about operational readiness. We've been speaking about financial readiness. But obviously, nothing beats the experience of someone who's done it so many times, like Margaret. So the question I wanted to ask you is, what financial metrics are the ones that we should look more into the details? We should really they matter the most when evaluating an Asian M&A target.
I think you should look at your target as a whole. So you will look at the financials, obviously. You will look at the profitability, the earnings. I would pay a strong eye at the quality of earnings. And by quality of earnings, I mean, is that sustainable? Is that reliable? Um, Obviously, you would look at the working capital and you will look at DSO. I would look at contracts. The commercial due diligence is key, really, really key. You want to know what you're buying and whether it is substantiated. Um, and obviously the valuation metrics, so discounted cash flow, enterprise value to EBITDA, debt to equity. So those would be the what you want to understand is how solid is the business that you're buying.
Could we say that every dollar of EBITDA in Western markets is needs to be compared with another dollar of EBITDA, let's say an Asian economy with different ties, or can we say that yeah, a dollar of EBITDA in a sort of in a particular economy, can be analyzed in the same way as in Asia. In other words, how should we approach due diligence here when we look at the numbers? Is there something special that we need to pay attention to? Is there anything that the Western acquirers usually get wrong? Yeah.
Looking at the nature of the transactions within the P&L.
hmm
I
So the
think
nature
that's
of the transaction, yeah.
yeah, I would look at basically all the individual transactions. I would look at invoicing. Um, I would look at contracts. Um, those are elements that allow you to really understand what is it that you're buying.
Okay.
Assets, I will look at the assets. A lot of the things that need to be looked on is sometimes the assets that are being used by the companies need to be replaced and are fully depreciated. So you need to make sure that you build that into your business model so that you're able to operate.
Yeah, this is something that we see a lot in so many activities. We tend to see that the book value doesn't tell the whole story. Because personally I've been working on an Indian acquisition in the last few weeks, so I can tell you also about my experience, you know. So we tend to see that the market value is so far away from the book value that we need to do so much more work on this. And I suppose that's also your experience, Marguerite, yeah?
Yeah, so it's looking at inventory. Is all my inventory expired? Um, I'm not saying this as a joke. Don't get me wrong, and it might not be the case, but these are elements that maybe in a Western world we need to be less cautious about. While in Asia, it's important to have a look because you may have interesting surprises down the line, and more importantly, don't underestimate the integration costs. What is the investment to bring those two companies together? And too little might end up having consequences and a lot of disruptions.
Oh, this is very, very useful to have as a warning, as I said. So it's really, really important that um, we gain the right knowledge, the right experience, and we're also meticulous with the due diligence. Yeah, you can never spend insufficient time on due diligence, so we say. So it's important. So the legal, the technical, the financial due diligence, the operational readiness of the business as well as the financial readiness. Yeah. So operational readiness is where we can see how the business is going to potentially operate after the acquisition. Because let's not forget, when we invest $1 in an acquisition, we want to see more than $1 after a while, because that's what we do. We want to grow capital, of course. Yeah.
What
Um,
tends to happen, I suppose, is also um, if your due diligence is too light, then your integration plan will not mitigate all the risks.
mhm.
And that would end up with problems down the line. I'm not saying it cannot be addressed. I'm just saying it might take longer or it would require additional investment that was not initially planned in your business case. So my advice here would be really to take the time to go through your due diligence to understand the risks, to understand the gains as well, so that your integration plan is as close as possible to reality.
Yeah. No, thank you for this. This is such an important point you're making here. It's about really so many unknowns. I mean, when you start an acquisition process, you have to effectively. Yeah, I mean, personally, as a CFO, sometimes I see myself as if I'm working for two companies, not for one company anymore, because you have to spend time on not just on your company, but on the company you're acquiring. It's as if you're watching every day what's going on in the company you're acquiring. So you cannot take your eyes off. You just cannot take your eyes off. You have to really uh you have to really get the right due diligence and assume that you're already managing that business. Um,
Exactly.
in terms of deal structure, I wanted to ask you this question. Are there do you see, obviously, in your experience, creative deal structures, like, for example, the earnouts, the vendor financing, anything that you see? Tell us all about it in Asian markets.
Absolutely. Most of the transactions I worked on have earnouts. Um, Some even have an earn out over 2 years. On occasion, I've seen sellers joining our business for the period or duration of the earnout because it gives them hands-on, ensuring they get that earnout. Obviously, joint ventures with options to buy shares at predetermined dates. Those are the ones that I've seen the most, but absolutely, I think they're definitely the case. Also, some of the sellers might need funding to be able to pay the severances or for any reason. So yes, absolutely. Creative deal structures are definitely happening in Asia.
Thank you so much, Margaret. This is such an important area for so many funders or businesses in general looking for M&A. There are endless ways to do a deal, so long as the intention to do deal is there. So, and those who do not have experience might think that there are only a couple of ways to structure a deal. In actual fact, that could not be further from the truth because there are so many ways. There could be earnouts, as Margaret was saying. There could be a share buyback in future. There could be so many ways. There could be so many ways. So, and we could actually spend hours and hours talking about these things. So it's we're just giving you a small flavor on this, but again, there's lots of education here about how to do these deals. And I wanted to ask you also this question about currency risks because we tend to see volatility in the currency markets in Asia more than we see in Europe or in the USA as well, in more developed markets. Just tell us in your experience, yeah, what is the role the currency risk or foreign exchange exposure play when you have to structure a deal?
I mean, you cannot disregard the foreign exchange risk nor the currency risk because obviously it gives an additional layer of risk. So it is a measure of stability, right? Just as growth, just as interest rates. And so the more risky the deal, then obviously the valuation becomes less interesting. But that doesn't mean it does not happen because there are a lot of mitigation and deal structures available to protect you against the foreign exchange. So then what is very crucial is to have the right negotiation in the right environment for in order to find an agreement basically with the seller. But there are protection mechanisms and they just need to be agreed upon.
No, thank you for telling us this, Marguerite. I think it's fair to say that we are dealing with such a fast-growing world in Asia that the economic changes they really dictate obviously the changes obviously in so many variables. And one of these variables is currency. It's currency risk. We know that, for example, we go probably one of the fastest growing economy for the next 2 generations is going to be India. So let's say India rupee is one of the currencies to watch. For example, there are so many factors at play, so many macroeconomic factors at play. Don't forget about geopolitics as well. Obviously, that's something else that so we never should underestimate in terms of what he can do, especially when we look at recent development across the world.
Absolutely.
So you want to say something, Margaret, on that? Yeah.
No. I was just agreeing with you.
Okay, so yeah, we go also geopolitics, and in general, the conclusion we can say with the experience of those who've done it so many times, like Margaret, the conclusion is that financial implication in an M&A deal could be so wide. It could be so widespread. In particular, when you're looking at deal structure, there are just countless ways to make it happen. If you really want a deal, make it happen. And one of the suggestions I would always make is don't wait to be perfect because perfectionism will destroy a deal. So if you decided that you're going to go for a deal, but you're waiting for the exact perfect economic circumstances, you might actually miss the boat. Yeah. So that's a very important consideration. Okay, so now let's look at the operational integration now, because most M&A activities, most acquisition fell on integration, on execution. So how painful is that? So
Um, I'd say the first operational risk for me is employee retention because it impacts everything.
Mhm.
If you are not able to retain the employees and make them join and embrace, you will lose knowledge. So basically, why did you acquire this company in the first place if you bought technology that you don't know how to use? Or uh, it could be anything really. Furthermore, if you don't have the employees, you will not be able to retain the customers. So basically, you're buying I wouldn't say an empty shell, but almost. Your benefits will not be there. So, not understanding what drives employees, not understanding how you can welcome them and communicate with them will end up with larger problems down the line.
Now, thank you for uh, putting the employee issue at the top of the list, really, because what we tend to see is in the underestimation about this. I mean, for example, the acquisition to be done in India requires for you to be there to really meet the people. You can't do an acquisition remotely without really understanding the culture, but going there, meeting the people, um, talking to them a lot. Do you think that's the first operational risk that get underestimated after acquisition? Is it really the importance of the employees? Yeah.
Yeah, I truly believe so. In particular for bolt-ons in Asia, knowledge of how the business operates is usually centered on very few employees. So
Mhm.
losing one could end up being not being able to invoice, not being able to service or organize logistics, or there's people were driving that business
Mhm.
and not understanding the relationship between those employees and the customers could end up in a disaster.
I always say many times, and this is obviously regardless of any business special circumstance, productivity drives the world. Now, people drives productivity. These are the two variables that make business happen, and you are validating. You're validating really how we should be stressing on this issue. When you buy a business, you should really get 100% on top of the HR, the organization chart, making sure that you plan ahead and you know how to reward employees after the acquisition. It's absolutely fundamental. As Margaret has clearly stated, as obviously confirmed, yeah. Success stories. Tell us about success stories where integration works so well that you could not believe it, or where it actually did it ever happen, by the way?
I think that if by flawless you mean no mistakes and no changes, and that just doesn't exist. At least I have not experienced it. What I would say a flawless execution or integration looks like is where there is the right communication in order to take proactive decisions, where there is the capacity to adapt plans and take prioritizing actions. when there's a real embrace across all functions. So it's understanding that it's not just finance or operations, but that they're all linked and they succeed in one makes they succeed in the other. That's for me when you achieve a flawless, basically integration.
It's like a puzzle. You have to click so many moving parts, yeah?
It's what makes it fun, though. Yeah,
Oh,
absolutely.
that's yeah, I mean, obviously it's about creating really the the business that will be successful. On the flip side, what is a reason you commonly experience why integrations fail in Asia? I mean, you already told us about some example before, but feel free to expand on that.
So for me, would be a due diligence that is too light.
Hmm.
So problems were not brought to the surface, and so they're not reflected in the integration plan. They were not planned for. So that's the first. The second would be overly optimistic business plan,
Hmm.
where growth was exaggerated and costs were underestimated because you're in it, you from the start you start with issues.
Hmm.
Um, Not adapting your integration plan. Also understanding that sometimes, in particular in Asia, um, acquisitions are new for people, and they also represent extra work. And so understanding that you need to drive both things, the acquisition, but still run your current business. Because the idea is not to have a wonderful integration, but then your original business is facing issues.
Hmm. I
The
think
other thing that I would add is not understanding. Sorry, I interrupted you.
no, no,
Not
go ahead, Margaret.
understanding that the real good reasons why you selected that business, and those need to be brought to the surface and integrated. It's not about I take your customers and I empty your shelves and you do everything as I do. This is not why you pick that target. So what makes them unique and how can you improve both businesses by bringing them together?
So really selecting the target and sticking to the reason why I select the target. Yeah, is that correct?
Correct.
Yeah, yeah. So no, thank you for such an important point here because it is really crucial that we establish our expectation, and our expectation they need to they need to um, be met effectively with the right execution. We can't change. We obviously the reason why we acquire a business, we want to make sure that there is a very strong reason. That strong reason remains, uh, during the negotiation phase. But then even more, the post integration has to be done according to the initial objective. Yeah, this is such an important point you made, Margaret. Thank you so much. Um, KPI system, I wanted to ask you this question about the alignment, because when you acquire a business, you then have obviously a business that is bigger than it was before the acquisition, but now you need to ensure that the integration includes the KPI system and the reporting structure. Tell us, how did you find this post-transaction?
Sorry. I would say that in M&A, there's no one answer fits all kind of situation. So it's really understanding what are the systems that the business that you're acquiring has and what would be the challenges. In an ideal world, you want to have data on your systems as soon as possible so
Mhm.
that you are able to harmonize and get people on the right KPIs. But for me, there's two things. There is one, which is availability to data. And then the second is onboarding of employees on that data. And you may have the data availability on your systems, but the KPI transition should be progressive
Mhm.
so that the teams feel on board and they don't feel overwhelmed. If you, for example, I'm just going to give you a typical example. If you expect people that used to work for a family-owned company, and we had that in India, to get on board with service trackers and KPIs and reporting, it cannot be done overnight.
Mhm.
And the real, I think, side of how to do it is really highlighting the benefits to the employee. It
Mhm.
shouldn't be I'm imposing things on you. It should be, look, if you have this, then you're able to have more activities or you're able to sell more, or which will again increase your income. It is doing an integration right. It takes time and it takes adapting and it takes looking at the human side of people.
And presumably, the post-integration phase will need to really take into account of a long period, yeah, a long period of integration.
Yes. Um, for most of the transactions I worked on, we looked at their integration for the next 2 years.
Mhm.
There's a point with bolt-ons where the complexity is identifying which is which, because obviously when you build in synergies, which is the point, then it's difficult to split the costs. So it might be a bit of a haircutting exercise, but we try to monitor how the business is going. And then at one point with the bolt-on, it becomes organic growth.
Thank you so much. This is so educational for all of us. Really, it's very important. It's really gold information for many of us, really. Um, with your experience of doing such high number of integration in Asia. Question I wanted to ask you in general, on top of the lesson you're already given us, yeah. Any more that you would like to tell us about? Any trends that we should be considering as well?
I think there's going to be a lot of bolt-ons happening over the next few months. Obviously, the geopolitical environment is changing things. We have growth expectations in Asia, in countries you mentioned. So obviously, China, India, Indonesia. But I also believe in countries like Vietnam. So I think Asia is a very interesting and exciting region to be working in, with a lot of opportunity coming our way. But as always, opportunities need to be studied and they need to be accordingly planned and strategized.
And you think the bolt-ons are still the dominant strategies for growth in Asia? Things are shifting maybe. So tell us about your view.
For me, in terms of volume, yes, because people will use bolt-ons to lower the risk.
Okay.
I believe there will be a few strategic big ones
Mhm.
with everything that is happening geopolitically. Yes.
Yeah, geopolitics is obviously a very interesting variable, I should say. Uh, yeah, we got really big changes in terms of yeah the geopolitics which are dictated by the economy end of the day. So when we see the economy developing, we will see the geopolitics following, of course. Yeah. So it's such an interesting place to be. But yeah, the lesson you've given us on operation integration are really valuable, Marguerite. This is so valuable for many of us because as we often have experience in the history of business, really, integration is unfortunately where most M&A will fail. And the question, the thought that we have is how bad is that? Because it is so bad to work so much on an acquisition, but then obviously invest in money, invest in energy, invest in time. But then to see it failing on execution is something that we should all really think about avoiding. So I wanted to reach some final consideration, and I wanted to also tell the audience how they can reach you, Marguerite.
Absolutely. So you can reach me on my LinkedIn. If you want to have a chat, just please contact us. We'll be very happy to have a discussion and see how we can help you. So yes, looking forward to hearing more about all of you.
Oh, thank you very much, Marguerite, and it'll be a pleasure to collaborate in future with your M&A expertise on acquisition in Asia and in general. Um, really, helping as many business owners as possible in those countries like Indonesia, Vietnam, Malaysia, India, and all the region effectively to help them really scale up their businesses. And I'll take the opportunity to really tell everyone about the Exponential Blueprint. You can reach us every Wednesday. It's a free newsletter which started in January from 0 subscribers. Today we got more than 22,000 subscribers, and every week that figures is changing because we have more and more subscribers. We obviously welcome a lot of the Asian entrepreneurs who would like to join us on this, because this is the newsletter is open to everyone in the world. It has been estimated that, according to the operator, we are top 5% finance newsletter. We really go well beyond finance, as you have seen today. It's a lot more than finance. We want to really educate about wealth creation in general with financial intelligence. Don't forget our YouTube channels, where we've already been joined by 43,000 subscribers. So I'd like to really thank Marguerite for her time today. The experiences and the lesson that she's giving us today, they are absolutely priceless. Thank you so much for your help, Marguerite, and
Thank you
we'll
so
be in
much.
touch. Okay.
Thank you, Matteo. Have a good day,
And you,
everyone.
thank you.
Bye.
Bye.